Crypto fam, listen up. SEI is sitting on a powder keg right now. The charts are screaming consolidation, analysts are dropping $1 price targets, and even AI-driven analytics are confirming strength under the hood. This isn't just another altcoin pump story. This is the kind of setup that makes people look back in 3 months and say, damn, I wish I caught that breakout. So today we're breaking down why SEI could be gearing up for its biggest move yet. From the triangle squeeze to the Fibonacci targets, from Wyckoff patterns to stablecoin adoption. If you've ever wondered what the perfect storm looks like in crypto, you're about to see it. Let's get into it. First stop, at Intern dropped a breakdown that perfectly captures the current vibe. SEI's chart is coiling tighter than ever inside a symmetrical triangle. And when crypto coils like this, the release is usually violent. Let's paint the picture. Buyers keep stepping up with higher lows, meaning every dip gets eaten up faster. Sellers, on the other hand, are running out of gas at lower highs. This setup is what traders call a volatility squeeze. It's like a soda can being shaken up. The longer it goes, the bigger the explosion when it pops. SEI Intern's targets, 55 cents to 65 cents. That's nearly a double from current levels. And the key is volume. If this triangle breaks out with real buying pressure, SEI could move fast. Very fast. Historically, these are the moves people regret missing. Triangles like this often precede liftoffs that redefine the chart completely. Now I'll be real with you. These setups are powerful, but they're also traps if you jump too early without a plan. A lot of traders get chopped up waiting for the breakout. Personally, I think volume confirmation is key here. If we see SEI smash resistance with conviction, that's the green light for me. But triangles aren't the whole story, because if SEI manages to flip just one level on the chart, we could be staring at a run all the way to $1. Enter at Ali_charts, who's making a bold claim. If SEI closes a weekly candle above 38 cents, the road to $1 is wide open. Here's why 38 cents matters so much. SEI is currently hovering under 30 cents, holding steady near the 0.618 Fibonacci retracement at 29 cents. That's been solid support. Now, 38 cents lines up with the 0.5 Fibonacci retracement from the last big swing. Think of these fib levels like stepping stones on a staircase. Clear one, and the next ones come into play. Above 38 cents, Ali's chart shows the path lighting up toward 49 cents, then 68 cents and eventually $1.14. That's more than a 3x move if the stars align. But here's the kicker. SEI isn't just any coin trying to squeeze through resistance. This is a layer 1 blockchain optimized for speed and throughput, designed for trading, DeFi, and payments. That fundamental angle gives more weight to the technicals. If you've been around crypto long enough, you know the breakout levels that matter. 38 cents for SEI could be the Solana $5 moment or the AVAX $10 breakout. That line in the sand where accumulation turns into acceleration. And let's be honest, once momentum builds, FOMO takes over, and suddenly everyone's talking about SEI like it's the next big chain. For me, 38 cents is the level to watch like a hawk. Now, Ali's call sounds bold, but it's not the only one. Another analyst is seeing something even bigger brewing, and it ties right into a pattern that's been reliable for decades. According to Wyckoff architect, SEI is following a textbook falling wedge, a bullish reversal setup that almost always breaks up. Here's the two-scenario view. Either SEI has already bottomed, or it dips one more time inside this wedge before blasting upward. Now this isn't just random TA jargon. The Wyckoff method focuses on accumulation and distribution, where smart money quietly loads up before the big move. Once that wedge breaks, we transition from stealth phase to markup phase. That's when the big candles hit the chart, and retail realizes too late what just happened. Honestly, this fits the broader cycle perfectly. Q4 is historically bullish for crypto. Bitcoin ETFs, halving hype, liquidity rotation, it all lines up. If SEI pairs its technical breakout with macro tailwinds, we could be staring at a serious rally by year's end. But charts and patterns only tell half the story. What about the fundamentals? Well, one investor turned to AI analytics, and the results were eye-opening. At _ the Spacebyte decided to cut through the noise. Instead of following hype, they plugged SEI into SAG3 Labs AI platform, and the signals came back strong. Here's what they found. SEI's fundamentals aren't just holding steady. They're gaining strength. We're talking clean signals on adoption, trend growth, and ecosystem health. Monthly diagnostics show SEI's network is progressing steadily, not stalling like many altcoins during consolidation. This matters because technical setups mean nothing if fundamentals are rotten, but in this case, the data is backing up the charts. AI confirms what traders are already seeing. SEI is primed. This is where I get excited. I don't just want to see price action, I want conviction. An AI-driven analysis strips away the bias. If the fundamentals are improving while the chart is coiling, that's double confirmation. That's when I start thinking about longer-term positioning. And there's one more piece of the puzzle. The kind of thing that goes beyond charts, beyond TA, and into real-world adoption. Stablecoins. Finally, the official SEI Network account dropped a reminder. Stablecoins on SEI aren't just another feature. They could be the backbone of global payments. They laid it out clearly. Stablecoins are global, instant, programmable. And on SEI, they move faster than on most other chains. This isn't just hype. Stablecoins like USDC are already dominating real-world use cases. Cross-border payments, remittances, merchant adoption. By making stablecoin transfers nearly instant, SEI positions itself as the payment rail of the future. This is sticky adoption. Once businesses and users experience fast, cheap stablecoin payments, they don't go back to clunky old systems. For me, this is the long game. Traders chase breakouts, but adoption builds empires. So let's pull it all together. SEI's chart is coiling tight in a triangle. Analysts see 38 cents as the trigger for a run to $1. Wyckoff signals accumulation. AI fundamentals show growing strength. And stablecoins are finding their fastest home on the SEI network. This is what I call alignment. Technicals, fundamentals, and adoption all pointing the same way. But remember, crypto is never a straight line. Volatility is the cost of opportunity. Manage your risk, have your strategy ready, and don't let emotions control your trades. Now I want to hear from you. Is SEI about to break out and become the next big L1 story, or will it fake out and trap traders before liftoff? Drop your thoughts in the comments. I read every single one. If you got value from today's breakdown, smash that like button. Share this video with a fellow crypto trader, and subscribe to Goldrush Crypto Daily for daily insights and alpha. Tomorrow we're covering Bitcoin ETF flows and what they mean for altcoin liquidity. Trust me, you don't want to miss it. Until then, stay bullish, stay sharp, and as always, this is not financial advice. Do your own research. I'll see you tomorrow.